Good afternoon, traders. Happy to have you here. Today, we're going to be diving into my July monthly recap. Monthly recaps in general are just super important to be doing. It really allows you to take a bird's eye view of everything going on. And the last few weeks leading up to this monthly recap, I basically really started diving into my watch list and my, what are they called? My lessons. Basically, instead of just, doing a simple watch list, which I don't really use so much anyway since I use the scanner, I really started moving my watch list into more of a analysis and lessons of the day. And then for this recap video, this monthly recap, I really dove into that, all those different posts. I'll show you them in a second, and try to get a lot of value out of it and try to figure out what my learnings are. And it comes out to be basically I got to do a lot of rule updates. So this is going to be a little bit different of a recap than usual. I'm going to be talking about, let's see, 1, 2, 3, 4, 5 new rules. Okay, well, 4 new rules, one big update of the rule that I want to review with you guys. And I'm going to also wear my, I'm going to pull off a Tom and wear my blue light filter goggles, more or less. And the reason for that is I've been looking at the screen for probably too long today, but that's how it goes sometimes. First of all, let's see what's going on here. We are back to all-time highs, over 120,000, but look at this. It's been a shaky last few trading sessions. I feel like we haven't really made much progress lately, and that's just how it is sometimes. If we go to the weekly chart and we actually put in, and look at this, volume actually increased a little bit. That's good to see volume being pumped up again on my end. Now let's go to this month. Where is that hiding? And actually, before we click on apply, and also let me go here to July. This is the recap for July after all the way down here. Click apply. I did not want to click apply there. Let me go ahead and just go to this one, and then you'll see my overall monthly profit for last month, July, not here, but here, is $1,700. This was the month of just giving back profits. I don't think I've traded this sloppy since like October, and then January, where I had a really hard time making some moves. Like, okay, in March, yeah, this is March, there just wasn't that many opportunities. There were much more opportunities last month in July. I just somehow was not able to jump on them, capitalize on them, and once I finally started trading, I ended up losing and giving back just so much money. Let me go back to here, and then let's go to the weekly. You'll see, so July, started off pretty smooth. This was a 4-day week, and then I had my first 5-day week, full 5-day trading week, and I think it was like 4 or 5 weeks, and I ended up just losing $2.7 thousand. And then I, slowly get back on trend here, but this was sloppy, and even these other green weeks were pretty bad. Monday on average, I just did horrible, and there was so many times where I just gave back profits, and it looks like I only made profits on tickers that I held for less than a minute, which coincides with my overall average. My overall averages for this whole entire Momo account is kind of the same situation. Let's quickly dive into the stats here. So these are my overall stats. If you want to take like a mental snapshot, I'll compare them a little bit to the July stats. Now, in July, this is July, that can't be right. Net profit, 15,000. Oh yeah, win results, we got to go here. And also, we don't want front side. I don't know why all this stuff is selected. Like I said, I was doing kind of a lot of research. I actually did a really good job only trading front side. I only had 2 other trades with ranging, and it was just like 2 scratches, so it's fine. So this was a bad month because the profit margin is at 11.5%. That's really bad. Even my averages is a little bit higher, 30%, and like green days are usually like around like 65% or so. So basically what that means is I just gave back a bunch of profits this month, and you can really feel it. My win ratio, win risk reward here is negative, which is okay. It's actually not that bad based on my overall average, but I'm really working hard to get that number in. This is actually where most of my focus is, and I'll talk a little bit more about this later when I updated one of my rules. Average position cost is no longer really my main focus in increasing that, and I'll tell you a little bit more why about that later. I think it's going to make a lot of sense. Average winners here is pretty fine, but again, that's not my focus either. It's really doing this, the average win, average loss, the risk reward. I want to have at least a 1-to-1 risk reward. That's where a lot of confidence can come from. That's where a lot of sizing comes from. That's where a lot of good risk management comes from. All that basically gets shown into that exact statistic. So risk management is number one. And I'll talk a little bit more, or actually pretty much the remainder of this video, I'll share with you guys how I'm going to focus on doing risk management, specifically in the summertime, because summertime, man, it has been the biggest slump ever. And by the way, if you guys want to check out my specific posts and me diving into them, you want guys to read them more yourselves, I have the major new and updates to day trading rules. This is the recap we're doing today, and I have my whole complete rule book here if you guys want to check that out as well for the day trading Momo portfolio. Okay, so let's dive into some of these rules here. First rule, and I guess maybe I'll just do full screen for a second. I don't know if that's like nicer or not. First rule is a max loss update. So here it goes. During the summer months, which I'll just use a broad stroke, and I'll just literally call it Q2 and Q3. So that's pretty much 6 months of the year. It's like half the year is worse trading. And it always starts around like March or April where like I instantly hit a wall. It's just like, boom, instantly. There's no more momentum like there was maybe in January, February, March. Or January and February, and then you start doing that big size, and then you have these huge losses, or you start sizing up into these moves, you add into your winners like you're supposed to be doing, but there's no more continuation. And I often find either it's like late March or like April or sometimes May, it's always somewhere in that area where it's like instantly I hit a break wall. So at this time, I want to start updating my max loss rule, which is by reducing it in half. Well, these things are hard to like for you guys to probably see me. If I am down half max loss, I will call it if I'm in Q2 or Q3, because man, oh man, and let me show you guys this. I think this is a really important one. Let me show you guys my running P&L here. I can't even count how many times I had huge losses in July where I just gave back so many profits. For example, right here, I'm up like $700 and I end the day at max loss. Right here, I'm at, $400 and then I end the day, down 500. Here, I hit my max loss. Here, I just have a huge loser, big loser across the board. So you're seeing like really shaky trading this summer, and that's because I'm getting a little bit too aggressive and I don't have my risk management locked in. So this month was like a lot of reflection for me. So let me talk about another rule here that I think will help a ton. So basically, max loss will prevent days like this, $1,000 max loss, $1,000 max loss. These both would have been like $500 or $600 max loss days. So boom, just like that, I would have had $1,000 back in the pot. Plus, I would have maybe not ruined my my confidence, so I would have been able to hit the ground a little bit better. So max loss, rule number one, Q2, Q3, I cut it in half. So right now, my max loss is 10% based on my average position size for the month, which in the summertime basically goes down. But I have a hard time adjusting that mentally. So if my max loss is at 1,000, then in the summertime, if it's Q2, Q3, I put it down to 500. So that's number one. The second rule pertains to some of these big losses as well. And when I am over 5% in profit based on my average position size, so let's say it's a $500 day and I'm at 600 and then I'm at 700 and I'm like, here we go. And then I have a big loser and all of a sudden I'm back down below 500. Maybe I'm at like 400 or 300. Just like that, I'm no longer allowed to trade because I had so many days last month and in the past, and I've always thought about this rule. It's always been in the back of my head, but now I really want to apply it, where if I start giving back profits, I call it. So here, for example, I'm up 700 and then whack, I go down to 349. I would have pulled the plug. This day would have never happened. This huge loser. Because sometimes what happens is you take a big loser and you just, your brain switches. You just have a red mindset. There's a really good book, Blue Mind. It's all about like oceans and your mind gets more creative and more relaxed. I have big blue panels in front of me. It's a good book, but I feel like the opposite of that is red mind. And that's like when you start getting emotional, FOMO, revenge. And that's exactly what happened here. You can just literally see it where, I just gave back all my profits. I had a little bit of a dead cat bounce and I gave back the rest, and I just, destroyed myself mentally and emotionally and profitably. So just all bad. Same situation here. I was up. Actually, this one's a little different. So let's go through this one. I was up like 400 on here, and I just started selling off. So technically, this wouldn't necessarily apply if 10,000 was my average position size, which it wasn't. My average position size, for July, let's just go back here for a second, is much lower. In general, it's $6,500, but for July, it's $5,300. So technically, this was already like a 9% day, and I started giving back. So even that basically means that this was over a 10% day, and I started giving back. So you can see where I need to really focus on that risk management. There's no reason I should be, up over 10% and then hit max loss. That's ridiculous. Plus, the fact that max loss is $1,000 is insane, because that's way more than 10% based on my average position size. So you could just see my risk management was really off on some of these days, and it's just really not a good thing. So next thing, you guys know this probably, because I said a lot in the recap videos. If there's a new ticker pops up, half size, half average size. That's simple. There's been so many times where, just like right here, look at this. New ticker pops up, take a loss. New ticker pops up, take a loss. Small losses, $100-$200 is no problem. But if you take a loss right away, like here, first trade, I was down $400. Talk about recovery. That's stressful. Nobody wants to deal with that. So if I see a new ticker, and I've been doing this, I've been applying this, and it's been working really, really well. First trade, half size, half average size. And if I'm in the flow on this ticker, if it's trading nicely, if it's doing what I want, I start sizing up quickly. I start going to average size. I start going to 2 average, 3 average, 5x average. I want to size up. I want to get aggressive, but I don't want to do it blindly on a new ticker. I want to do it on a ticker that I'm going to flow on. So new tickers, half average size, and that is the way to go. And then the second I'm in the flow, it could even be my second trade, start sizing up if it's a good ticker. If I'm inconsistent, I'm giving back profits and one step forward, one step back, don't trade it. Now I had a really good example of that today, where I was trading what was it, APTM or something? Yeah, AM, I just looked it up, AMTD, and I was trading it with like half average size. I was like $3,000, $4,000, $5,000, here and there. I made 100, lost 100, made 200, lost 200, and then boom, it broke out. I had a nice, decent little win, and I was like instantly got in the flow on it. And then I started sizing up. I went 2x average, and then I had my nice winner. And that one trade basically paid for the whole day. But I just made sure, like, if I had like that $10,000 or $20,000 first trade, and I lost on it, it could have wiped me out for the day. So patience, risk management, survive until you thrive, and that's really what it's all about. So yeah, that's the new ticker rule. Very simple. Summer. Now here's a summer specific rule. One and done. That's basically it, and that's what I actually did today. So if I nail a front side, or I get like a bag of scattered trades, and I'm up over my daily goal, let's say that's 5% based on my average position size, I call it a day. It's summertime. It's slow. You rarely get that's the second leg up. You don't really get it. Sometimes you do. Maybe like 5 times in the whole summer you do, but it's not worth it. So I'd rather take more and more base hits and not blow up that confidence, because that's so important to have that higher confidence. So that's simple. If there is, if I go up over 5%, I'm just going to go ahead and call it there. I did that today. Perfect example. We had one of the worst opens of the year, I feel like. I made a YouTube video literally called that most dangerous opening 2022. And pre-market, we had a really nice move on AMTD, and I traded it. I did stop trading a little bit too soon, but here, actually, I'll just show you guys the exact picture right here. Boom, boom, boom. Let me zoom in a little bit. I did stop trading it a little bit too soon. I definitely should have got more aggressive here for sure. I mean, that's not what I'm talking about now, but at this point, once it was below the 90 EMA, it was done. And this should have been like maybe a red trade or something like that, or I could have called it at the break of 12. But here I should have kept trading. Now, my point is, look at this. for another basically hour, we have no action. The market opens, it pops up, and then just flushes. This was a 40% flush. So, one and done. I'm up over my daily goal here. And what I did, I took a 40-minute nap. I watched the open. I didn't trade. I was kind of hanging out with you guys, and boom, it was that simple. So my whole point here is on the summertime, you just want to be a little bit more one and done and move on, because there's just minefields everywhere, and don't slip up. Now, the last rule here is something that I've been doing for maybe like 4 weeks, and the reason I've been doing this is because since I'm in Europe, I basically start trading at 1 p.m. Eastern Standard Time, and I go to the, I go to the park where they have calisthenics. So I do my workout, I come back, make lunch, or take a shower, make lunch, and then it always gets really tight right around 1 o'clock. And sometimes, especially with my girlfriend, we're cooking or something, all of a sudden, it's 1 o'clock, which is 7 a.m. Eastern Standard Time, and I should be trading, but I'm opening TOS. And I've had so many times where I open TOS, there's a ticker moving, I jump in on quickly, I'm already 3 minutes late, I should have already been in it, and then boom, I take a loss, I'm annoyed, I'm frustrated, so on and so forth. I hate that. So I made an alarm for 10 minutes before 7 a.m. starts. It says trading stations. I get everything up and running. I'm, cool, calm, and collected. I'm in the Discord, and, by 5 minutes before the market opens, I'm just sitting there relaxed. I got maybe Zendu playing, so I hear the tickers too. Everything is set up. Good, time to force extended. Everything is ready to go. So by the time 7 o'clock hits, I can jump in on it if that's what I need to do. Sometimes, especially in the summer, I don't have to do anything. But I got to be ready. Trading is my number one thing. So it's that's where I got to put all my energy into, and I cannot slip up and be late by 3 minutes and then all of a sudden ruin my whole trading day because of that. It's happened to me before, so that's a new rule. Now, I hope you guys remember these rules. Let's see here. Max loss in the summertime gets cut in half. When I'm over 5% and then I start going back below 5% of my daily goal, I stop trading. When there's a new ticker, half average size first. In the summertime, one and done. Once I get back over my 5% daily goal, and I nailed that front side move, whatever it was. Now I could be up over 10%. I didn't say stop trading when I go over 5%. I just mean once I'm over 5% and then I start selling off, or once I get my whole entire move, that was a 30-minute front side move, and I nailed it. Call it. That's it. Be happy. We didn't choose this profession to trade and be glued to the screen. So take time off, take a nap, go on a walk, do whatever you want to do. And then the phone alarm is just really nice for me to, kind of have an excuse. I know personally I need to be at the computer in 10 minutes, but it's sometimes good to be oh, sorry, I have an alarm, I got to get to work. It's good for other people as well, not just yourself. So I think that's really, really important. Remember, anyone can see this post. It's part of my personal blog, which is available for everybody. So here it is, and here are my all my rules that I outlined, and then here is my day trading Momo complete rulebook with all of the rules I have for day trading. It's pretty simple. It seems like there's a lot of rules, but they're all kind of around the same risk management theme, and they tie up those loose subjective ends. You want to be quite objective with a few things when it comes to day trading, so that's what it's all about. I'll leave the link to this whole entire post in the comment right below this video. Anyway, guys, I hope you enjoyed. I hope you got value out of that. Have a great rest of your day and a great start to the August. I'll see you guys then first thing tomorrow morning. Like always, stay safe and make some awesome trades. Ciao, ciao.